The Nifty Bank has significantly underperformed the Nifty in the past few weeks as well as months that we have seen. There are two charts which are suggesting that the Nifty Bank is at a crucial juncture, and I want to highlight both of them for you. But before that, let me also just point out that the Nifty Bank has now underperformed the Nifty for 3 weeks in a row, and last week itself on Friday it managed to close at a 1 month low as well. Let me just recap a little bit further as well. Not too long ago, a few weeks back, we did manage to see the Nifty Bank scale up to its 200-day moving average levels, but from there on there has been a more than 3,000 point decline on the Nifty Bank as well. If you have a look at the ratio chart, which is the first one that I want to highlight for you, the Nifty Bank to the Nifty ratio, that has come down to a level of 1.91. Now there are two significant points of this 1.91 level is that the Nifty Bank managed to bounce off from this level in May 2020. After that we did see a stellar rally coming in for the banking stocks. And if you have a look at 10 to 15 years down the line, in 2008, 2009, 1.89 level on the ratio chart was the important level to track, because that is where it had formed a double top as well. And post that we did manage to see a huge rally for the banking stocks over the next 5 to 10 years that we've had. So that is the significance of this ratio chart that I'm referring to. It is at a crucial juncture. If we manage to scale to higher levels, which means that the banking stocks will outperform the Nifty going forward. However, if this ratio starts declining, which will mean that the Nifty will be outperforming the banking stocks as well. The second chart that I want to refer to is something called as a death cross formation on the Nifty chart that has happened as of last Friday. Now, what does a death cross mean? It is basically in technical analysis parlance that the shorter term moving average crosses below the longer term moving average. And this time around on the Nifty Bank, it has happened on the weekly chart, wherein the 50-week moving average has crossed below the 200-week moving average. Now, once again, this is very significant, because if I track back in history, there has been only one such instance back in 2009 when on a weekly chart the Nifty Bank managed to form a death cross formation. It is a bearish indicator. However, if you have a look at the only instance in reference that I'm referring to, the Nifty Bank managed to form an intermediate bottom and rally from there on in a few weeks after making this death cross. So very interesting to see if history will in fact repeat itself or not. But lastly, tracking the internals of the Nifty Bank, not too enthusing as far as the internals are concerned, because all of the constituents of the Nifty Bank have declined so far this year, and 9 out of the 12 banking stocks are trading below their respective 50-day as well as 200-day moving average. Also, if you have a look at the analyst consensus target prices, all of the 12 stocks are trading below the consensus price except for one stock, and that is PNB.